Hi everyone, welcome to this session. This session is in English. We already had a Persian session and I think 46 people was in that session. So I hope that this one also will be good for everyone. Yeah, I hope that I can teach you something new. Maybe you already know everything that I'm going to tell you. Maybe you don't know. And this is the point here that we have to know some basic rules of trading when we put our assets or money into the trading. So we're gonna start. My channel is Let's Hit It. I will put these PowerPoints. I will upload these PowerPoints in the channel, and then you can use it as a reference. I got the pictures from internet because I can't make them here. And you can use this PowerPoint. You can share it with lots of people, no problem. And I hope you enjoyed this session. Please mute your microphone. Please don't draw something here in this area because last session somebody was drawing something, and it's don't let you know it's don't let me to focus on teaching you. Okay, so let's start. Uh, to enter to the cryptocurrency market, we have to first know how many type of cryptocurrency we have. So it's not only the fundamental. It's about you have to know on what you're putting your assets. Okay. So before we start this session, I have to tell you that. Okay, wait. Before we start this session, I have to tell you that my first language is not English. So probably I will struggle with teaching in English. So I'm so sorry if I have some mistake in grammar or these things. So I'm just focusing on transferring my information to you. Okay, so let's start. There are two groups of people. One of these groups believe that cryptocurrency is Bitcoin, and whatever is outside of Bitcoin, they call it altcoin. So Ethereum, Litecoin, Monero, or any other coin is a part of altcoins as per this category. Okay, so only they consider whatever is outside of Bitcoin is altcoin. There is another group which believes cryptocurrency has a more category. So they believe that there is some digital currencies that you use digital currencies for buying services or buying the stuffs and commodities. Okay, so digital currencies, they are two parts. One is stable coins like USDT that we know it as a Tether, USDC, BUSD, and the other stable coins. And one is privacy coin. What is the privacy coin? Why we use privacy coin? So we use privacy coin because, like previously, before people know what is cryptocurrency and people start trading on cryptocurrency, some people in darknet, which is a very horrible place, they use to pay money for people to the other people, for example, to kill someone or to do some illegal things. Okay, so they needed a way for transfer of the money that both sides be secure and both sides nobody can understand that what is the like origin and destination of this money. So if you go to the bank, you will pay money, for example, to me. Okay, so the banking system knows that who is getting the money and who is paying the money. So here, people started to use cryptocurrencies as a privacy transference of the money. And then this privacy uh, shaped as a legal transfer also. For example, now the governments use this way of the transfer. Those governments that are under the sanction, they use this way of the transfer to buy the commodities or to sell the commodities, and then they just run the sanctions. Okay, or sometimes the big people like big investor, they don't want to be known, so they use these kind of um, like assets to buy the stuff or to sell the stuff. So as per this category, like coins like Bitcoin, LTC, and recently Doge is a part of like digital currencies. You see that previously, like last year, PayPal informed everybody that they accept Bitcoin as a way of the payments or as a way of the receiving the money. And recently, you see that some travel companies or some hotels, or like, for example, companies like Tesla, they are informing people that they accept Dogecoin as a way of the payment. So you don't need paper money. If you have these kind of assets, you can start to trade, still trade, peer-to-peer trade. This is the first category. So stable coins are for buying the other coins. So we use stable coins only to buy the other coins. We use privacy coin to buy the assets, to buy the commodity, to buy the service. So another type is utility coins. These kind of cryptocurrencies, they have a project. Here, fundamental enter to the point. So like for example, Ethereum, they have the project for AI contracts, and other coins like ADA and EOS, all of them, they have some projects and they needed people support on those projects. So when you buy, for example, Ethereum, you are somehow you are supporting this project to improve. And when the project improve, the price of Ethereum goes up. Okay, so utility coins are those coins that they have already a project or they started a project, and these coins, they make the coins to get a support for that project. Okay, some of these kind of like utility coins, they have their own blockchain, and some of them, they use the other coins blockchain that we call the second group as a tokens. So tokens are those that they are not coin, but they use utility coins blockchain. Okay. So to enter to the chart, you have to know some basic and some rules that here I bring some of them. I got these pictures from internet, and the first thing you see in the chart is candles. So what is the candle? Candle is showing us how the price is moving. Is the price going up, or is the price going down? So with the color of the candle in some specific time frame, you can guess that how is the situation of the market on that point. If the price gonna go up, you will see the green candle. If the price is going down, you will see the red candle. So how the candle forms? Each candle has four parts. One is the opening, one is the closing, upper shadow, and lower shadow. So I'm telling you, for example, consider a coin in the time frame of 1 hour. They start the price with $100, and then They move the price up and down during 1 hour time frame. So you will see $95 and you will see $130 in this duration. And then finally, they close the price 120. So this part, which is the body of the candle, is making the candle's color. If the opening is lower than the closing, for example, here opening was $100 and the closing price was 120. Okay, so you will see the green candle. What it means? It means that the buyer power is more than the seller power in the market. If you see the opening price, for example, is $100 and the price like had a tolerance between $90 and between $50 and $110, and finally the price close at for example $70, you will see the red candle. What it means that the seller power is more in the market. So the most important thing is that you have to know what is the seller power and what is the buyer power. So if you can recognize these things, you can understand who is winning the market and you can make a nice and good trades. Okay. So as I told you, the green candle shows the buyer power. So in the words, we say bullish market. In this 1 hour time frame, market was bullish, means that the buyer had more power than the seller. If we see a red candle, means that the seller has more power than the buyers. So here we say market is bearish, means that the bears, like sellers, has more power than the bulls here. Okay. So as much as you see the candle size is bigger, means that the power is more. The smaller candle size means the power is less. So if you see a big green candle, it means that the power of buyer are much more than if you see a small candle. For example, here, if you have for example 200 buyer, you have 100 seller or maybe 50 seller. Okay, but here if you have 200 buyer, you might have 170 or 150 seller. So here the power of the buyer is more than the power of the seller in compare of here, much more. Okay, and vice versa here. If you see the big red candle, means that seller has much more power than when you see the small red candle. Okay. This is the full candle without shadow, means that the market had no tolerance between opening and closing, means the full power. So when you see such candle, what it means, the market want to show you the complete power is with the buyer, and here the market want to show you the complete power is with the seller, means there is no shadow, there is no tolerance in the market. So you can understand that 100% market will be bullish after that, and you can predict that 100% market will be bearish after that in the specific time frame. And when you see the shadows, it means that the market has a tolerance. So you have to stop trading and you have to see what's going on. Here, the power of seller and the power of buyer are the same, almost the same, because the distance between closing and buying are almost the same. But we have different type of candles, means that the market is unstable. As much as you see the long shadow, so it means that market is unstable, market is untrustable. You have to wait in this point. Okay? And also the place of this candle is so important that we will see in the next slides what's going on. So as I said, it means the war between buyer and seller. Buyers want to take the market in hand. Sellers want to take the market in hand. We have to see who will win, and then we enter to the market. So I will tell you about resistance and support line in the next slides. But here, we consider a line here. So the market was bearish. We see this candle, and then there is a line, resistance line. So after that, after we see this green candle, means that the buyer took the market in hand. So after here, we expect in 90%, there is always the way for mistake, okay? But we expect that the market go up. So change the like trend and goes up. And here, because we have a red candle, usually this happen under the resistance line. So usually we have a bull run, and then the war happened between the buyer and seller. And after that, 90% we expect a fall. So we have to take care of these candles when we are doing future trading, or in a like bigger time frames. When we're gonna do the spot trading, we have to just see what's going on. What's the color of these candles when they shape? Is it like on the support line, or is it under the resistance line? So then we can understand, is it a good place to buy, or is it a good place to sell? This is very important to know. Okay, here we have a long shadow. As I said, when there is a long shadow, means that the tolerance in the market is the market is unstable. There is lots of tolerance in the market. Okay, but again, on the next slide, you will see what's going on. It means here, when we see this long shadow, it means the opening price was here, and the buyers could take up the price here. The sellers had lots of pressure. They wanted to bring down the price. So because they sell here, so they have lots of power. So because of the sale here, the price drop. Why? Because there is always a relationship between supply and demand. So when the demands is become less than so when the demands become less, the price always drop. So here, when you sell, the demands become less, so the price drop here. But still, people start to buy here, and the demand become high, so they push the price up. So those people who buy here are more than those people who sell here. So here we see the power is with the buyer. That is the reason we see it is a green candle, and the shadow is to the down, means that the seller tried to bring it down, but the buyer pushed the price up to the maximum, or here to the maximum. Okay, here almost the maximum. So in these green candles, you expect the market like the bullish market, but still the place of these candles are important, that we will check in the next slide. Here, exactly vice versa. The start point is here. So the market, the buyers try to take the price up, but again, lots of people sold here, the asset, and the price dropped here. And finally, here, lots of people bought, but the amount of buyers are less than the amount of sellers. So it couldn't go back to the right place and it get closed here. Okay, so we expect that here the seller market is more than the seller power is more than the buyer power, and we have to check where is it located. So the place still is important, and this one the same. Okay, here on the resistance line, so we came down, we touched the on the support line, we came down, we touched the support line, and here we have a green shadow inverted hammer. So when this happens, when we have this kind of candle on the support line, we expect the movement to up 90% and 10% it can fall down. Okay, and if the same candle with the red color goes usually under the resistance. So here is the resistance line, and usually we see this candle under the resistance line, and this is a shooting star. So usually we want to pass the resistance, and here there is lots of seller, and because they sell a lot than they buy, we cannot pass this resistance and we fall. We expect a fall 90%, and always keep 10% for mistake. Like here the same, this is a hammer. Okay, so usually we see the hammer above the support line. So it comes down, it's a fake breakout, and then goes back because buyers here they bought a lot and they could keep the price up, and then we expect the upward movement. And this one, which is a hanging man, we expect this one under the resistance area. Usually, like most of the time, you see this one under the resistance area. Okay, so we are down of the resistance. We're gonna pass the resistance, but because of the seller, because lots of people sold here, so the power of seller is much more than the power of buyer, and then we cannot pass the resistance and we see downward. After knowing the candlesticks, I want to talk with you about psychology of the market. This is so important for everyone to know how the market is playing the game. So cryptocurrency market, stock market, forex market, there is no difference. All of them, they have supply and they have a demands, and everything in the market is shaping with supply and demand. And actually, the other thing that's shaping the market is the fear and request of the people, like how I act, how I feel, what I have to do. So here I see, for example, a coin is going up. I start, okay, before I buy, it goes here and I start buying here. And then I don't know how to find the next resistance level. So I buy, and I tell myself, okay, this is my favorite, this is my dream coin, this is the way that to be rich. And if I have this coin with this sharp movement, I will see in next 2 months my money will be double, triple, like my money will grow a lot. But then here the market will have enough seller and it will drop, and then I say, oh, I didn't set a stop loss. Okay, I still have the hope to go back to the market, to bullish market. And then it goes here. Oh, I have lots of loss. If I close my position here, so I don't know what to do. I will lose half of my money. No, 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 I will wait. I will wait. Then it goes here. Oh, I almost lose all of my money, but I still have hope. And then they start to panic. and then the market still comes down, like what's now is happening to Bitcoin, and reach to the place that you see, oh, you almost lost, for example, 90%, 70% of your money because you had a panic before. In this point, you can't decide logically. So your logic says sell it, leave it, just leave it. Finally you will find a dip and you will buy in the dip, and then you can have the profit. And here, in the worst place, you sell your assets, and then you you can't buy, right? You can't buy the dip because you already lost the dip, and you already lost this much money, right? And then this is the cycle and goes here. So if you understand how to find the resistance, if you understand how to behave with the market, how to guess the market, how to play the chess with the market, you will be the winner. You will never buy during the pump. You always will wait to buy in the dip. If you will set stop loss, you will know trends. So if it gives you alarm that this is the time, the trend is broken, you will get out of the market here. Although you will lose this part of profit, but you get out of the market here and you keep this much profit for yourself. And then you will wait, you will not panic, you will get the dip here, and then you will have the profit from the dip. Okay, so this is the psychology of the market. This is what the successful trader will do. This is the difference between the amateur trader and successful trader. Okay, so let's go to the next slide. What is the resistance and what is the support area? So we have some areas that the market trend will change on those areas. If we are coming from up and then in some area the market change the trend and goes up, we call it support. And when we are going from down and in some point we see, okay, this is the end, and lots of time we see that we cannot pass this area. What's wrong with this area? This is the resistance area. Okay, so we call it resistance and support area. I'm stopping sharing this PowerPoint. I'm going to the chart to show you how to find the resistance and support area. This is very important. Okay, so let me share here my screen with you. Okay. So for previous session, checking Bitcoin chart. Let's go a little bit back, like here. We're gonna find what is the support area and what is the resistance area. Okay, so we start with these tools. We see which place we can have the most touch. We can use this, like this line here. We check, not here but here, because the trend changed here. Once we had a touch with this line, we had an uptrend. So I will make my support line here, and then I continue it, because always the history repeats in cryptocurrency. Because why? If you see somebody gonna touch your eyes, immediately you close your eyes. If you see there is some hot surface, you will not touch your fingers like you will not touch that hot surface with your fingers, right? So this is the thing that's happening in your mind, and it's not by you. It's automatically. It's an order that your brains gives to you to do this, to do that. So in the market, we have the same. Buyer and seller make behavior that they repeat in the future, and they already repeated in the past. So if it's a support area here, I expect the same movement somewhere in the future. So I continue the support here. So I see here, this one, we went up, we came down, stopped here. Uptrend, we went up, we came down, stopped here. Uptrend, went up, we came down, stopped here, and it continued here, and then we went up. Okay, so we went to one level upper, and here, because we had 1, 2, 3, 4, almost 5 and 6 touch, 7 touch with this in this time frame, I can say, okay, this support is valuable support, because 3 points is enough for me to draw a support line. Less than 3 points is useless. Okay, this support is the resistance area for when we are down. You see here, we touched this one and we came down. And here, when we want to pass this one, because this is not a strong support, a strong resistance, and only touched one time, so with the small candles, we passed it. Okay, but if we have a strong resistance like here, if we continue it, you will see here we tried to pass, we couldn't. We tried to pass, we couldn't. We tried almost, we couldn't reach there. Almost we couldn't reach there. Even if I can get it a little bit bigger, then we will have more valuable one. We tried to pass, we couldn't. And here, because it's a strong resistance line, we need a power. What is the power? The buyers. So the buyers start buying here to push it up. Okay, so usually if we want to pass a strong resistance, or we want to pass down the strong support, we need a big candle. For resistance, passing the resistance, we need a big green candle. For passing the support, strong support, we need the big red candle. Okay, so you have to practice by yourself to find out support and resistance area. Here it's a resistance area. You see, lots of touch we had here. Here we had a fake breakout, but the buyer had not enough power. And because we had lots of touch here with the chart, so when it wanted to break it, it broke with a big red candle. So now you can find, okay, when the price is falling from here, where is the point that I expect the price goes? So the point is here, because the next support is here. So from this method, you can understand, okay, when you are here, you can understand what is the next destination. We are going down. Sometimes we have a fake breakout, like here, it came, it touched the support, but it's a big shadow. What I told you, when we have a big shadow, means there is a war in the market. There is a war between buyers and sellers in the market. But finally, the buyers could get the price in hand. But you see, this one, this shadow is red. So we expect that somehow the seller has the power in hand, even if we see here the green candle, means that still the seller price, the seller power is much more than the buyer power. So the buyers try to increase the price till here, but because the power of the seller is high, we expect it fell down minimum till here. Okay, so we can find the other resistance and support area. We see it's not a strong one. This is a strong one for me. So if this one broken, I expect this one. It is 20. Okay. So for support, you will see this area, right? And maybe if we have a history, no, we don't have history in this price. If we continue, it will come here. We call it double Fibo because support and resistance are not on the one area, and they are having the difference. They have a distance and they are so close to each other. So here, this area is so strong. Why? Because we have two areas of the supports and resistance. Okay, so I expect the fall till here for Bitcoin, for those who doesn't know my point. If we go to another coins, we can see easily, we can recognize the best point is you find it in daily. So 1 day, and then you extend it in hourly. So I can see there is a support here, is broken. Okay, what is the next support? The next one might be here. What is the next one? Might be here, right? Again, support and resistance are so close to each other. So this area is my deep area. Okay, let's go back to the PowerPoint. So now we know what is the resistance line, what is the support line, and we know how to find the resistance and how to find the support line. And in the next slides, I can tell you how we can use the support and resistance for trading. Okay, now we have to understand the trend line. What is the trend line? So trend is the way that market is going. Market is going up or market is going down. This is so important that you have to recognize where the market is taking us. Is it taking us up or down? If you see here in this green trend, market is going up. Okay, please don't draw something, okay? So if you see this in this trend, let me. So market is going up here, but we see up and down here. But totally, if you buy here and if you sell somewhere here, you had a profit. So the market was bullish for you. But if you buy here, you can see it is less profit because market is up and down here. So it's a daily time frame. You will change your time frame to a smaller one, and you can find a smaller trend. So each trend has a smaller trend inside, which, for example, here up, down, up, down, up, down, up, like up still, down, up, down. And if you just zoom on it, and for example, it's daily. You go to 1 hour, you will see this downtrend has up and down, up and down, up and down trend. That we use smaller trends for future trading. But if we want to do spot trading, we usually use the daily, like 4 hour, 6 hour, weekly, and daily. So what weekly tell us? Weekly can predict the market for next like 2-3 months. Daily can predict the market for next 2-3 weeks, and with the hour you can predict the market for next days. Okay, this is the trend line. So here we had the bullish trend, here we had the bearish trend. So trend is not always like this. Sometimes we have a bearish trend. So this trend can tell you where the market is going up, where the market is going. So if somehow the, here the price change and this upper bearish trend break to the up, so I expect that this is the end of bearish trend, because we will have a new trend to top. Or if somehow the bearish trend break and it goes like from this one, it goes down, we expect the more power of the seller in the market, and means that we will have more dip. So you see here it goes up, come down, goes up, come down, until this one or this one break. So if the upper trend of the bearish break up, we will have a bullish one. If the downer trend come like breakdown, we will have the more and sharper bearish trend, like what happened in the Bitcoin. Okay. Before we go to this one to see how to trend, I want to take you back to the chart to just practice how we draw the trend line. Okay. So let me share my screen with you. Okay, let's go to some LTC USDT. Okay. Oh, this one. So the XRP USDT, because I had lots of drawing there, or maybe that one. I can make a new layout. Okay, this is good. So it's ETH, LTC USDT. Let me see. Okay, this is good. I can say this is the trend line here. And I told you before, the trend and support line is valuable for me as much as it has the more touch. We have 2 touch here, 1 touch here, and lots of touches here. And if I continue, we have lots of touches here too, because always the behavior of the traders in the market repeats in the history. Like whatever happened before will happen in the future. Okay, so we have a downer trend, but still bullish one, almost here. Okay, we had a fake breakout here, and we'll continue it. 1 touch, 2, 3, 4, almost 5, almost 6, 7, 8. So this is very strong trend line for me, which is acting as a support. Why? Because we are here. When we are here, we are on the top of this line. So I told you, when this trend breakout is alarm for us. Okay, this is not bullish anyway. Between this area, you're still bullish, but here the market is giving us alarm with the big red candle. Seller showed the power and it fell down. And where it's coming, where it's going? It's going here. We have to find the supports. and resistance line 1. We already touched this support. What is the next? So if we continue this one, what's the next support? Okay, let's go here. This is a support and resistance both, or double support. I can draw it like this, or I can draw it as a double Fibonacci, like this. 1 and 2. See, I already have 3 touch here, and I already have 3 touch here. So what I told you, when you see the lines so close to each other, you have to know this is a strong one. So still you can consider it as this support and resistance area. And as much as you see it thicker, like we cannot have this much. We can say it is the support and resistance. We can't have this much. But you see it is thicker than this one. Okay, so this is a strong one for us. I expect a dip here for LTC 104. And what is that? 118. Wow. I expected 113 in the forecast that I had 2 months ago in March. So you can check my trading view. I got the dip of LTC 113. So let's see. Here we have a support area that in case in some percent it breaks this strong one, the next level is here that we expected it. Okay, so now we know how to draw the trend line upward and downward. Like if I want to draw the trend line downward, here, let me, okay, here, this is a downward trend line for me, you see, and the downward side will be like this. I can make it more beautiful. So you see, this line is so important. We had the touch from down and we had the touch, lots of returns from up. You see, it's no difference. Your trend is horizontal or your trend is like this, has a slope. The most important is how many touch, how many times the market just returned from the line, up, down, like horizontal, whatever, but how many times the market rejected from that line. Okay, so that one gives you a strong line. So this line is very important. Okay, here you see, with the big red candle we broke this line and we had a retest on this line. Here the market gave us the time to get out of the market here, and then it fell down. Okay, this is the importance of trend line. So I go back to PowerPoint. Okay, now we know what is the support and what is trend, what is resistance, and now we're gonna see how we can use it for our trades. This is so important. I always tell you when I give you signal, I always tell you after breakout and after retest. Why I'm always telling you after retest? Because, for example, here you see we broke out this support, this resistance line, okay? And we did a retest here. Like we had this movement like N, You see something like N. So this is a retest here. And then after retest, we bought it here. So the market goes up, and from the history, like from here or before, we find out that support zone, the resistance zone is here. So in the first resistance zone, if we bought it $100 here, we put $100 of our assets here, we might have 150 or $200 here because we had this much profit, right? So we take out the original assets. Here, for example, 100 we had here, now we have 150. So we get out of 100 here and we keep $50 or profit. We invest that 100 in another coin, or we keep it for a dip of this coin. And then we keep just our profit to go up. This is the risk management, the portfolio management, okay? So the market goes up, and here we see a down. Okay, the market is giving us alarm. Hey, come on, you see 3 red candles back to back. So what it means? It means that seller are going to get the market in hand. I can sell here. I can wait. What's going on? I see this is repeating. This is repeating. Hey, sell it. This is the end of this line. This is the resistance area. You can now draw a resistance area here. Okay, we sell here, somewhere here, here. And then it goes up. And we say, we know already, we already checked, the market is with the sellers. And then you will see, okay, although the buyers got the market in hand and the demands are more than supply here, but the seller already informed us that the market is with the seller, the market power is with the seller, and it will fall. It will fall, 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 fall. So we got out in the best point possible. Although we could sell here, right? But we didn't accept this risk. We had this much profit and it was enough. This is the difference between a successful trader and amateur trader. Amateur trader want it and they think it, okay, this much profit I want too, and then suddenly it will fall and they lose all the profit and all their assets that they already had. Okay, this is so important. The other point, okay, why I told you retest down and then buy. So imagine you buy, you see a breakout and there is no retest, or maybe a retest, but with a strong, like you see the candles, and then there is only 2 green ones. Okay, you can set stop loss under the support area. If you have a stop loss, what it means that you are avoiding to have more loss if in case you made a mistake, because everybody can make a mistake, not only you, even I can make a mistake, even the big traders can make a mistake. So we have to have a stop loss to avoid a bigger mistake and bigger loss. So here, for example, we entered here, okay, retest is down, we don't pay attention to this red one, and we don't pay attention that this is an alarm for us, but we enter here, okay, and then the market is going here, okay, it's doing the second retest, it's making the support and it's good for us, and then we set a stop loss under the support zone. So because we have a stop loss, we are relaxed, and then the market goes here, it hits our stop loss and then goes here for to have a fake breakout and goes up. When the market is here, when the price is here, we say ourselves, oh, see, We had a stop loss. Sarah told us the stop loss is important, and it just touched on his stop loss, and then it went up, and we lost the profit. We lost this much money. So we made a mistake to set the stop loss. But let's see what's going on after that. This was a big alarm for us that the market is going to be bearish. It goes here because always the market want to take your profits. So here it took your profit, it took your assets. Here you started buying again with the less assets. Here again it took your assets, it took your assets, it took your assets, it took your assets until here. So if you set the stop loss here, how much you lost? 8%. Like if you had $100 here and you invested on LTC, for example, you had $325. You bought one LTC. Here you lost $25, so you had $300. Okay, so you only lost $25. Okay, and then you will wait. You are a successful trader. Okay, you know that the market is going to change the trend, so you wait here. Although you lost $25, but you wait, and then the market is going down, and you already found a strong support area from the past, and you already know the dip. So the dip is here, for example, 120. Okay, how much you had here? $300. How much you bought LTC? How many LTC did you buy here? One LTC. But when it comes to here, with $300, with accepting $25 loss, you can buy 2.5 LTC here. And then when it goes back to the stop place, you already have 170% profit, right? So this is the difference with having stop loss or just avoiding stop loss because you're afraid to lose this much money. If you're afraid to lose this much money, you will lose this much profit and you will lose your 325, like half, more than half of your 325 when it goes to 120, like 70% you will lose. Okay, so stop loss, setting a stop loss is so important for us. So what happened if I set my stop loss here under this support area, and then I want to, for example, I buy here, I set a stop loss here, and I want to sell here. Okay, this is so far a stop loss. If I lose, if I made a mistake, I will lose half of my money here already. And if I win, I will get half of the money, like as a profit. Okay, so it is like risk to reward is 1 to 1. It's not a good trade. But here you just lost 8%. Like even until 10%, 15% is acceptable. As much as this distance is lower, so you had a better trade. You just considered 8% as your loss, and then you got better profit in the dip. So just pay attention to this point. It is very important. This slide is the most important slides in this session. This is the end. I hope you enjoyed. And now for 5 minutes, 10 minutes, I can answer your question if we go back to the chart. So let me just return to the chart, make a new chart for you. And now you can unmute your microphone and just tell me if you have any question, and if I can answer your question, I will be happy. I can't read the chat area. So if you have any question, just unmute and then ask your question. Okay. So it means nobody has a question. Thank you so much, everyone. Really, it was a great time with you. If, oh, okay, there is questions. Yeah, I can get XRP. Okay, yeah, it can come again. I will show you. I will show you my idea about historical idea. Just let me check XRP for a friend, and then we can go. Okay, this is XRP. I go to my favorite time frame, which is a daily one. I reset my chart to get the best view. Now I'm starting to find the resistance and support lines. We have a support here. We have another support. Where is it? Okay, this area is acting as a support for us and resistance here. And I can make it a little bit bigger. And then I can continue it to here. And then let's go further. This area can be a support. 1, 2, 3, 4, 5, 6, 7. It's a strong support for me. Let's see what's going on here. Okay, we have more touch here and almost here. And then we have another support in this area. Up, down, down. Okay. 1, 2, 3, 4. Okay, we don't consider those pullbacks. Here we broke it, and then past it was acting as a resistance, as a support, and then here we went to one level up, still support, here acting as a resistance. So this one is also so important. So I expect the fall till here, 53.99. We have more support area. You can see we have here, it's not a strong one. You see, there is not enough touch. And the touch was so weak. We have this area, which is almost a strong one. Let's see. So if I am you and I want to buy these assets, what I do? You see here, acting as a support, acting as a resistance, acting as a support and resistance between these two areas. Resistance, resistance, here resistance, here support. So what I'm going to do, if I want to buy these assets, I will set one order here. Like if I want to invest $100, $100. Okay, I buy $30 here. In this point, and I buy $30 here. In this point, and I buy $30 here. Okay, so what if it comes here, gets my order $30 and then go up? We always know if it goes up like this, 100% somewhere again will fall. So what is the strong movement? The strong movement is okay, it touch here, it goes up and come down again to retest this line and then goes up. On that point, if I see this retest, I will cancel these two orders and I get all in here. So I had very safe trade, and also I will set my stop loss here. Okay, so I had very safe trade. If I lose, I will lose this much, and if I win, I will win this much. I can show you. Okay, this area. Support, support, resistance, resistance, resistance. Okay. So risk to reward is risking this much, rewarding this much. Or even I can consider this much to take out my original assets. Okay. Or no, I want to have a long-term trade. I already know how to draw support and resistance line. So this one might be my favorite target for long term, because I know although it's easy to come down like this, but it will be very hard to go up. Like it's not happening in few days. So we go here, we come here, we go here, we come here until we can have a big buyer, and then we test here, we have a big buyer, and then we have to come here doing some movement until we go and we break this line. Okay, so this is for the second question. Okay, this one. So why I'm telling everyone that in 26th of May I expect this point, which is the support I draw for you almost between 20 and 21, 2900 something. So what happened in November 20? If you see the Bitcoin market, you see the sharp movement to up started from November, December last year. So in November 26, we had this big red candle, which shows the seller the seller power. In December 25th, we had the dip because we went up and we came down here. It happened in December 25th. Okay, we had something here, but here in this point, we had almost a dip. When it was January 26th. Again, we went up. When we had a dip in February 26th, we went up. When we had a dip in March 25th, we went up. When we had a dip in April 25th, and now when I expect the dip is May 25th and 26th. So why May 25th? Why always 25th and 26th happens? This is I was curious about this, and I asked my friends and the other traders and like professional ones, and I understood because I'm not doing a stock and forex. So I asked my colleagues that they are doing stock and forex, and they told me probably this day is the day that they close option trades. So that one has a big effect on the Bitcoin price. Okay, so the reason that I found is that 26, 5th of the month is a mysterious day that we have somehow the dips. So let's see. Let's see when we reach to the dip, and as if this, like if it happened one time, two time, then it's not a valuable analysis. But it happened one, two, three, four, five, six time before. So exactly like the touch on the line, I expect the seventh time also happen. But I can't say 100% it will happen. Just we have to wait, and let's see what will happen. But if this happen in this day, it will be so interesting, and I will be like happy because I made the right analysis. Thank you, everyone. Thank you for joining me. If you have any question, just don't hesitate to ask me in the group. Yes, we are talking Persian in the group, but it's no problem. You can ask your questions in English, and then I can answer you or my friends there. There are lots of professional members in the group that you can ask your questions. If they can answer you in English, they will do it. Or if it's an important question and like you just need me to answer it, and you can send me PV. You have my ID, and I hope in the next session I can start indicators, because actually we don't need indicators, because if you know these basics, then you know everything about trading. You just like indicator is just show off. You know where is the support, where is the resistance, where is the trend line, how is the trend line, like what is the important point. Why you need indicators? It just makes you more confused, because lots of indicators, they are not confirming each other. Just when we use indicator, for example, I have a doubt. Okay, I can see there is a war in the market. I don't know what is the demand. What I can't understand. The power is with the seller or the power is with the buyer. So on that point, I go back to lots of indicators, and I don't just pay attention to one or two or three indicators. I have just crazy stuffs of indicators. I can show it to you like a template. Okay. It's my template. You see? And I can add one more. Okay. So this is the complete set of those that I use. What they say the money got out of the market. They say we are going bullish, we are going bearish. They say RSI has a divergence. They say this the red signal is up, the blue signal is down, so we are going down. It gives me the selling signal. It gives me it is getting oversold, so we are so close to just hit the dip, and then we change the trend. Okay, so this one is showing me EMA 200. Okay, so sometimes we touch EMA 200, and after that, in 4 hour time frame, if we see after touching EMA 200, we have a sharp movement to up. Sometimes we have a fall. Okay, these ones are showing Fibonacci EMAs. Okay, so this is just, I could predict the market without these indicators, but sometime I just think, okay, now I have a doubt, now I can't predict, and then on that time I open my indicator. Okay, so I hope everybody enjoyed, and I had so happy time with you. And again, if you have any question, just ask me. I will share the PowerPoint in the group, and you can share it with anybody, no problem. There is no copyright, and you can share the video for everybody. I will be so happy if I can teach more people. Okay, so have a great day. Thank you for joining.